I need to be honest with you. When I first saw that SpaceX was down 40% since its IPO today, my reaction was, wait, the biggest IPO in history is already failing? This is a company that's priced at 135 a share about 5 weeks ago. Only 5 weeks ago. It shot up to $200 within days and is now sitting at around 120. That's an insane amount of swing for a company worth trillions of dollars. So naturally, I had to dig into this. Not just the stock chart, but actual fundamentals. Because there is a huge difference between the stock went down and the business is actually in trouble. And I wanted to figure out which one it is. And by the end of this video, I think you are going to be just as surprised as I am. So let's get into it. What's up, you guys? Welcome back. This is Jake. If you're new here, this channel is about investing, real estate, and personal finance. Basically, me nerding out about money so you don't have to spend your Saturdays and Sundays reading S-1 filings. There's a lot of time and effort goes into making these videos, so please do subscribe. It helps a lot with the channel. Today, we are going to talk about SpaceX, and at the end, I will tell you exactly where I personally stand on this. So please make sure you stay until the end. So the first thing we need to look at is the timeline. On June 12th, SpaceX priced its IPO at 135 and valued its company at 1.7 trillion. That is, hands down, the biggest IPO in human history. Demand was so intense, it was 4 times oversubscribed. And the retail investors, regular people like you and me, put in over 100 billion in orders. And the stock opened at 150. By the end of day one, it was at 161, so up 19% from the IPO price. And it just kept on going, wouldn't stop. Within days, it hit an intraday high of 225. So if you bought at the IPO price and sold at the peak, you'd have made almost 70% in a week and a half. Which, if you're the type of person who obsessively refreshes your stock apps, no judgment, we've all been there and done that, that's the kind of move that makes you want to throw all your life savings. And then, almost as fast as it went up, it started coming back down. Right now, it's sitting at 120, which means the stock is down around 40% from the peak. It actually dipped below the 135 IPO price, which is a big deal in the finance world. That means the IPO is sort of a failure, it's a broken IPO. It means someone who got shares as the original offering is now sitting on a loss, at least on paper. So what happened? Because there's a lot of price swings in just 5 weeks. Really, it comes down to two things. First, Starship. This is SpaceX's next generation rocket. And a huge part of why investors are willing to pay such a premium for this stock is to bet that Starship eventually is going to change everything. It's going to make cheaper launches possible, way more frequent flights, maybe even data centers in orbit. Someday. Someday. But it's had a rough stretch. In May, a test flight ended with the booster losing several engines and crashing into the Gulf of Mexico instead of landing. Then in mid-July, the next attempt got automatically aborted seconds before liftoff because a handful of the rocket's 33 engines failed to ignite. 2 rocky tests in a row, right after going public. Not a good sign for any investor. Secondly, there's this thing called a lockup, basically a rule that says early investors and employees cannot sell their shares for a set period after the IPO. Eventually, that period will end, and when it does, a huge number of shares will suddenly flood the market, which tends to put pressure on the price. And the market is already starting to price in that risk. SpaceX isn't just one business, it's 3, and they are widely different from each other. The first, and honestly the one that surprised me the most, is Starlink. I think most people, myself included, kind of default to thinking SpaceX as the rocket company. But Starlink, the satellite internet business, brought in 11.4 billion in 2025. That's 61% of the company's total revenue. 6 out of every $10 SpaceX makes is from people paying a monthly bill for internet, not from rockets. And it's the only one of the 3 segments that's actually profitable, to the tune of about 4.4 billion in operating income. Subscribers have gone from 2.3 million in 2023 to over 10 million now. That is a genuinely fast-growing subscription business. Then there's the space. the actual rockets. Think of Falcon 9 launching things for NASA, the Space Force. This is the part everyone pictures when they hear SpaceX. But it only did about 4.1 billion last year. Growth is actually slowing down, and also it loses a lot of money. A lot of what Falcon 9 launches is Starlink's own satellites. So in a weird way, the rocket business exists partly just to serve the internet business. And then the third piece is the one that's honestly the most controversial, which is AI. Through the XAI acquisition, that is X, formerly Twitter, they did about 3.2 billion in revenue, but lost 6.4 billion. So it lost double the amount of money of which it brought in. Not a good number. And here's the thing, this is the segment SpaceX is leaning on hardest to justify the valuation. They have thrown out this number of 28.5 trillion total addressable market, and over 26 trillion of that is specifically the AI opportunity. That's the part where I would tell you to raise an eyebrow, because total addressable market claims from companies trying to sell shares is historically not exactly known for being conservative. Let's just put it that way. So if we put it all together, 18.7 billion in total revenue for 2025, up about a third from the year before. It has solid growth, genuinely, but a net loss of 4.9 billion. And here's the number that actually matters if you're deciding whether to buy. Even after falling 40% of its stock price, it still trades somewhere around 70 to 90 times sales. For context, that's an extreme multiple. Its closest competitor, Rocket Lab, trades at a fraction of that multiple. So even with this drop, you're still paying a very rich premium. Talk about something the Elon Musk fanboys care deeply about, which is the bull case, right? We all want to know how much money we can potentially make and how much upside there are in a stock. Why not? So the good news for the bulls is that there are some smart money out there is still buying at this dip. And that's not because they are completely irrational. Wells Fargo just came out with an overweight rating and a $230 price tag, basically saying that they think the stock nearly double from here. Their reasoning is built around Starlink's growth and this idea that space-based computing could eventually be cost competitive with data centers here on Earth by around 2029. I think the estimate is a little bit too aggressive by 2029, really. But hey, that's what a big institution put out, you know. Casey Wood of ARK Invest also has been adding shares at this level. She's a controversial figure to say the very least, right? And she definitely gets a lot of attention every time she buys or sells something. So now let's recap the bull case. Starlink is a real high margin subscription business that's still growing like weed, and it hasn't even fully monetized yet. They literally just raised the price for the first time in years because they had been prioritizing growth over profit. Falcon 9 controls something like 90% of the global commercial launch market. That's not a small moat that took over a decade to build, and nobody's catching up next quarter. SpaceX has roughly 22 billion in government contracts already locked in, which gives it a floor of stable revenue. Then there's the part that's harder to put a number on, the optionality. If Starship actually works the way it's supposed to, it doesn't just make SpaceX a bigger rocket company. It potentially resets the entire cost infrastructure of getting things into space. That's the kind of bet that, if it pays off, doesn't just go up 20%. It's gonna go up in a way that will change your life. It's the same logic people used on early Amazon or early Tesla. You are not paying for what the company is today. You are paying for what it could become in the future. Now, let's look at the flip side of the coin, because there is a reason why the stock is down 40%. The valuation is really the whole ballgame here. Even after the crash, you are paying 70 to 90 times sales for a company that lost almost 5 billion last year. One analyst argues that the market still hasn't fully priced in how much money the AI segment is bleeding, or the fact that Starlink's revenue per customer has actually been declining as they chase subscriber growth over pricing. But now, we can see that SpaceX is starting to adjust its strategy a little bit and starting to raise the price. So this could have been the turning point of the bear case, but who knows? Then there's execution risk. 2 Starship tests failure in a row is no joke, and the investors are really getting jittery. The AI segment is its own risk on top of that. It's growing super fast, sure, but it's burning more cash than Starlink is generating. Then there's the important structural issue that nobody ever brought up. I don't know why, but this is not talked about enough, which is there are over 12.5 billion SpaceX shares that are currently locked up, representing 95% of the company's total equity. That means currently in the market, only 5% of the company's equity is being traded. Just 5%. Think about that. These locked up shares are held by venture capital executives, employees, while Elon Musk's stake remain entirely restricted and cannot be sold until June 13th, 2027, which is a year from now. Still, the current market only represents 5% of the float, which is nothing. And nobody is talking about this. And that's why the share price is so volatile, because there's a very huge amount of uncertainty about whether these insiders are gonna sell off their shares once they are able to do so. Now, since we have looked at the both sides of the coin, is it a buy? Is it a sell? What do you think? Me personally, I don't think the stock has hit the bottom yet. I think there's still a large amount of downside in terms of the share price that haven't been priced in yet. So I would personally take a wait and see approach. What I have just said is not financial advice. You should always do your own research. In a stock market this volatile, and a stock like SpaceX that's been trading like meme stocks, I think you should be extremely careful on whether to buy or hold the stock. If you find anything valuable out of this video, please subscribe. It's gonna help this channel a lot.